If you think getting rich is just about working harder than everyone else, it's time to hit pause for a second. After reading 50 of the world's most recommended money books and honestly giving up more than a few weekends, I've realized something wild. Almost everything we're taught about money is completely upside down. Here's a spoiler: your 9 to 5 job. It's probably just a fancier version of a hamster wheel. First off, have you ever noticed how some people just seem to attract money while the rest of us are out here budgeting like we're trying to defuse a bomb? Do I really need to give up lattes, or is there another way? After years of digging through finance books, podcasts, and YouTube rabbit holes, I finally cracked the code. Here's the thing: it's not about lottery tickets, finding a long-lost billionaire relative, or just working yourself into the ground. Wealth actually comes down to a few simple habits that nobody bothers to teach you. School would rather you memorize the parts of a cell than the parts of a paycheck. Stick with me because I'm about to share the lessons that can genuinely change your life. This isn't just about making money, it's about keeping it, growing it, and building the kind of freedom most people only dream about. Ready? Let's dive in and change how you think about getting rich. Let's kick things off with something almost every money book agrees on. It's not just about what you earn, it's about what you keep and how you put it to work for you. One of the most famous books, Rich Dad, Poor Dad, boils money down to two mindsets. One dad says get a stable job, work hard, retire, hope for a good pension. The other says build assets, invest, and let your money work for you. What are assets? Simple. Anything that brings money into your life. Stocks, real estate, businesses, or even skills you can use to make more income. And liabilities, those are the things that pull money out of your pocket. Here's the bold advice: if your house is your main investment, you might be doing it wrong. If all your money is tied up in your house, it's not working for you somewhere else. Here's the big takeaway: treat every dollar you get like a tiny employee. Send your money out to work and expect it to bring friends home. But let's get real for a minute. Most of us aren't taught to think this way. If you grew up like I did, you probably heard that saving for a rainy day is important, but no one really explained how to make your money actually grow. For years, I thought having a fat savings account was the goal. But as inflation slowly ate away at my hard-earned cash, I realized that just saving isn't enough. You need to make your money hustle for you. Moving on, cash flow quadrant shatters the old myth that the only safe way is a steady job. In reality, there are 4 ways to make money. Employee classic, 9 to 5. Self-employed, think freelancers. Solo business owners. Business owner, with people working for you. Investor, where your money works even while you sleep. The world's wealthiest people, they're not stuck in that first category. They move into owning businesses and investing, letting their money grow on autopilot. Let's make it super practical for a second. Say you have a regular job. That's great. Use your steady paycheck as a foundation. But maybe on weekends you take photos for local events, or you start selling something you're passionate about online. That's income from a different quadrant. And when you use part of your earnings to buy shares in an index fund, you're officially an investor, even if it's just $20 a month. That's how the quadrants add up and work together in real life. Next, let's talk about the book, The 4-Hour Work Week. Don't get hung up on the title. Nobody is working just 4 hours. The real point is this: don't trade all your time for money. Build systems, automate, and delegate what you can so you can focus on what actually matters. Another must-read is The Millionaire Fast Lane. Most people spend their lives in the slow lane, get a job, save a bit, retire late. Others never escape the sidewalk, living paycheck to paycheck, never saving. The fast lane, that's where you build something, an asset, a business, or a skill that keeps paying you long after the work is done. But, and this is a big but, the fast lane isn't easy. It's called fast because the rewards can come quickly, but only after a lot of learning, failing, and picking yourself up again. Here's where it gets interesting. The book, Think and Grow Rich, is famous for one thing: mindset. Some people think it's just fluff, but honestly, if you believe money is impossible to get, it's going to be. If you think opportunities are everywhere, you'll spot them more often. But mindset alone isn't enough. It's like having a gym membership, but never actually going. The wealthiest people have both a strong belief and the discipline to act over and over. Switching gears, let's talk about the psychology of money. Money isn't just about numbers, it's emotional, it's habits, and sometimes it's a bit of luck. Don't just copy billionaires. Their stories are often full of wild luck. Instead, look for patterns. If lots of people succeed the same way, that's worth noticing. Consistent habits like saving, investing, and not panicking matter more than swinging for the fences. So what are these habits? Here's what the books all agree on. Pay yourself first. Before you buy anything, set aside something for saving and investing, even if it's just a little. Live below your means. If your lifestyle gets bigger every time your paycheck does, you'll never get ahead. Start investing early. Even tiny amounts add up over time thanks to compounding. Ignore get-rich-quick schemes. There's no magic shortcut. Discipline and consistency beat hype every single time. Here's a quick story. When I was just starting out, I set up an automatic transfer of $10 a week into a separate savings account. It didn't seem like much, but after a year, I was amazed at how quickly it added up. Plus, I got used to not seeing that money in my checking account. Little wins like that build momentum. More importantly, the intelligent investor, Buffett's favorite, boils it down to 2 rules. Make decisions with a clear head. Don't let your emotions run the show. Markets go up and down. You don't have to be a genius, but you do have to keep your cool when things get weird. If you're just starting out, Girls That Invest is a great book. It explains why investing matters, how to judge risk, and how to build a simple portfolio. The Little Book of Common Sense. Investing is all about index funds. Boring, maybe. Effective, absolutely. Instead of chasing hot stocks, you buy a piece of the whole market and let time do the heavy lifting. One Up on Wall Street and The Dando Investor both share this tip. The best investments are sometimes right in front of you. If you love a company's product, do some research. It could be a great investment opportunity. Let me break this down with a quick story. Once I tried a new kind of braces at my dentist. The product blew me away. I looked up the company, read about their business, and bought some shares. That turned out to be one of my best investments. Not because I'm some Wall Street pro, but because I noticed something awesome, did my homework, and took action. So yeah, regular people can have an edge over the pros if you pay attention and do your research. To put it another way, here's something most books hardly mention. Before you dive into stocks or real estate, invest in yourself. Build skills that boost your value like negotiation, problem solving, or sales. Try side gigs, read more books, and keep learning. The returns on self-investment are huge, especially early on. Think of it like this. Ignorance is expensive. Alex Hormozy puts it best. Ignorance is debt. The only thing between you and earning 10 or 100 times more is information you haven't learned yet. Avoid costly finance mistakes. Finance Fiascos Volume 1 Raw Confessions plus mind map PDFs for bite-sized quick review of these videos. Use code CLUE10 for 10% off today only. Stay curious, stay humble, and keep picking up new skills. Even the smartest folks can trip themselves up with their own emotions. That's why almost every money book says to set rules for yourself. Decide in advance how much you'll invest. Have a plan for when things get rough. Don't let panic decisions wreck your progress. Luck definitely plays a role, but the right habits set you up to catch it when it comes. Don't get discouraged by mistakes. Every wealthy person has lost money or made big errors along the way. So, what does it all add up to? Here's the truth. Don't compare your beginning to someone else's highlight reel. Most overnight successes are actually years in the making. What looks like luck is usually just the result of lots of small, smart choices stacked over time. That's why getting rich isn't about luck or magic. It's about simple, repeatable habits. Learn the basics, master your mindset, take action even when it's scary, stick with it even when it gets boring. Start by investing in yourself, then put your money to work where it can grow. Ignore the hype, avoid shortcuts, and focus on what actually works. Most people overestimate what they can do in a week and underestimate what they can do in a few years. Make smart choices every day, and before you know it, you'll look back and realize you've built real wealth, one decision at a time. Here's the final tip. Celebrate your progress. Even if you're only saving a few bucks a week or reading one finance book a month, you're way ahead of where you started. Every little step adds up, and you'll be amazed at what you can achieve if you just keep going. If you found this helpful, hit subscribe for more straight talk on money.